Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's have a look again on the euro currency. So situation yesterday in the session has changed right in the moment of the Fed statement. So actually it was the major driving factor for yesterday, and actually we talked about this yesterday, that might really change the technical background, because as we said that Fed probably are not intended to cut the rate in nearest time, and actually all comments that have been given mostly stands around we will see. We need to wait, we need to see what the particular numbers will be, how situation goes, and so on. So that totally upset the investors, so maybe it was not really some huge upset, because it was not 100% probability that rate should cut the rate. But still, those investors who are still thinking about 3 rate cuts this year probably were disappointed. But anyway, in the current situation, market is returning back on a short-term bearish road, because with this reversal, our reversal candle has been erased. So actually market has not formed the pattern that potentially might be formed if reaction on the Fed would be different. And that's why this scenario just has not been realized. So it hasn't failed, it's not been formed. And currently, since today is Thursday already, we have 2 sessions until the end of the week, so it makes sense to set only nearest standing targets for the current performance. So here we have bearish context. On the 4-day frame chart, you could see what the particular pattern we could consider. So market right now stands at the attempt to break down of the range that we have talked about this, and potentially here butterfly might be formed. So yesterday we talked about these points, and that's actually it was some kind of the signal that we have discussed. So we said if market will break it up and move back to the 114.30, 113.25 area, in this case bullish pattern is possible. But if not, as probably the bearish context remains. And yesterday the Fed just has added some confidence to the background for the bearish short-term bearish context. Maybe reaction will not be long-lasted, but at least currently, today and tomorrow, probably we could get some downside continuation. Following the patterns that we have here in place, so as potentially the OP around 111.73, the butterfly target downside action, we have 2 of them. It's actually 112.30 and 111.89. So this one stands very close to the OP, and particular butterfly could finalize the OP target here. So with the breakout of these lows, probably market will trigger some stop orders that are placed here. So maybe it might be some acceleration in the moment of the breakout. That's what we have on the euro currency. On the hourly chart, I do not see something really special. So you can see that the free drive pattern, a 222 pattern that we initially were considering as possible background for retracement has become vital, and actually triggered this reversal. So it works really fine right from the confluence, this area that we have discussed. Now it's the only thing that we could consider is possible taking the short position with the targets that we have specified, maybe on some possible pullback. If market will show here some pullback, if you trade on intraday charts, you could maybe think about it, or you could try to use stop sell order right near the lows, slightly above them, just to not compete with the execution of the stop orders that have been placed below it. So in the moment of the breakout, you could take the short position probably. That's the 2 options that I have. Alternative scenario that we have, you could see on the Great British Pound. So although double repo has lost its shape, but now you could see that based on the background that we have, the bearish background, you could see that on hourly chart, on the 4-hour time frame chart, markets take the nice shape of the hand shoulders pattern that also is preparing for a possible downside breakout. With the ABCD pattern that we have here, This potential target might be somewhere around, let's check this, at least around 132.25, somewhere in this area. So that's actually what we have from the British pound as well. So currently we have short some bearish context, probably will last until the end of the week, and then let's see what will happen next, because market now is coming to the important support area that we already talked about. This 112.50s will be interesting area, especially since here we also will have the OP target completed with this ABC pattern that we have. Next week here, some bullish scenarios might be formed around it. Let's see.